You didn't start an e-commerce brand just so you could worry about accounting. The vast majority of your time probably goes to managing product and fulfillment issues, managing your team and keeping everybody on track, and most of all, managing marketing so you can keep growing revenue. And chances are that while you appreciate that your company's finances are important, it's also pretty easy to worry about it later. Or tell yourself that you'll start investigating your finances further once you get revenue to a level you're comfortable with. But like most things in life, the things we find it easy to procrastinate on benefit from routines. It's easy to push off working out because you're too focused on work. But once you have a routine in place, you can be comfortable that something important is getting done pretty much automatically. So how can you do the same thing for your company's finances? Well, in this video, I'm going to give you the simplest routine possible to make sure that you're working towards a financially disciplined company. Now, there's two things that you want to do on a daily basis. The first one is to review sales. This one is hopefully something a lot of you are already doing, but it's an important one if you're not. Everything in your business, your profit, your cash flow, your inventory flows from sales. So you should be on a daily basis checking your Shopify dashboard, Amazon, looking at wholesale orders to have an idea of where your sales are going. Checking it daily has a benefit of you being able to respond to issues very quickly when you notice something going wrong, but it also has this underrated benefit of you having a finger on the pulse of your sales activities. Over time, you develop a sense for how things are going, where there might be issues, and what to expect. Similarly, the second thing that you want to have a daily pulse on is your cash balance. Checking your cash daily and seeing why it swings up or swings down will help you develop an intuitive sense for how the cash flows in and out of your company. It'll also make you a lot more responsive to big cash swings. If you check your cash just once a month, that's an amalgamation of a whole bunch of ins, a whole bunch of outs, so it might net out to something a little flatline, but that doesn't necessarily give you the same insights as being able to see all the ins and outs every single day. It's not that you can't necessarily get the same information if you check it once a month, but it's more that checking it daily gives you a much better intuitive sense of how things are going. Next up, there are two things that you want to do on a weekly basis. The first one is that you want to review accounts receivable and accounts payable. If you only sell on Shopify, accounts receivable might be a little less relevant, but if you have wholesale customers, then it matters. You want to make sure that you're checking this weekly so that you have a good sense of how overdue certain invoices are. It also puts you in the habit of following up with customers every week if they're taking a long time to pay. It's very common for companies to check their accounts receivable once every month or 2 months, and an invoice could be 60 days overdue and they haven't followed up a single time. Checking weekly means you follow up more regularly, which means that people will pay you more frequently, which means more cash in the door and better behavior from customers. On the flip side of the coin, you want to check your accounts payable weekly as well. One major benefit of this is that it gives you a very good sense of what sort of cash outflows to expect in the next 30 to 60 days based on the bills that you have to pay. The other benefit is that it makes it easier to pay all of the bills that you want to pay in a given week in one shot. This is just a lot more efficient than going in and making one-off payments every time a vendor emails you that you haven't paid. The second thing that you want to do on a weekly basis is categorize all of your transactions from your bank feed in your accounting software. That means all the transactions that hit your bank accounts, but especially the ones that hit your credit card. The reason I like weekly is that it's a good balance between efficiency and also still having a pulse of what's going on. While checking your bank balance on a daily basis is a pretty quick activity, categorizing transactions takes a little bit of time to get into and open up your accounting software. So batching them and doing them all at once a week is a bit more efficient. It's also a good way to do a mini review of how your week went from a spending perspective. I also prefer to do it weekly versus monthly because if you do it once a month, then oftentimes it can be kind of difficult to remember what that transaction was from 30 days ago. So weekly strikes a nice balance. And lastly, we've got the things that you should be doing on a monthly basis. The first one is reviewing your financial statements and your KPIs. There are some transactions that are typically booked once a month, and usually an accounting team needs to do a whole bunch of month-end close processes. So typically you'll have your properly completed financial statement, so your income statement, balance sheet, and cash flow statement prepared once a month. It's important that you take the time to review all this in detail to really understand how your business is performing. And while most brand owners mostly focus on the income statement, pay attention to your balance sheet as well. There are often a lot of tiny issues that'll hide in the balance sheet that you won't notice because it's not on your income statement. And also use this opportunity to look at other KPIs as well, whether they be financial KPIs like days inventory on hand or e-commerce KPIs like new customer revenue versus returning customer revenue. If you need some ideas, you can check out this other video all about e-commerce KPIs. And the second thing that you want to do on a monthly basis might be a little bit advanced, but it's something to work towards. Most brands don't have a forecasting process in place, but if you do, on a monthly basis, you want to be able to compare your forecasted figures against your actual figures. And then you want to use that information to update your forecasted figures for future months. Forecasting can be a little bit more of an advanced tactic, so if you need some help with that, you can work with accounting firms that specialize in it, like us. But I've seen brands that'll build out a forecast and then essentially just ignore it. Comparing to actuals is crucial to understand why you deviated from what you were expecting and what you can do to fix it. Or maybe you just have to readjust your expectations. Either way, it's an extremely valuable process. If you can dedicate just a bit of time to this accounting routine, you'll be able to maintain a close pulse on your business's financial health. And that already will put you in a much stronger position than your competition who's driving down a highway at full speed with a fuel gauge that doesn't work. So I hope that was helpful. If you need any help with your accounting routine, feel free to reach out to us. But other than that, take care.